following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And what's really important, this is such a special time. Why? Because yesterday we made leg D in the Dow. Today we're almost certainly going to make a peak down. I don't see any way that we're going to be able to get to 17,160, whatever that was, 61. That was the high of yesterday. However, I am expecting, even though the technique of the Chapman wave is to identify from the lowest, most obvious low bar to four successively higher peaks where we assess and reassess, because it can go higher, but D, the fourth highest peak in the alphabet, that's where other things can happen. There is enough evidence at this particular point to say that there is internal strength. I call it residual strength. Enough residual strength to say that the QQQ Trust Series, the PowerShares Trust Series, should still make, let me just go there, here we go, QQQ, 1, 2, 3. The QQQ Trust Series has made a peak seed, 100.34. There is enough evidence to say that if certain factors are taken into consideration today, and there is a close that takes the QQQ series from the 99.28 price it's at now, having made 99.03 as a low, which was right in the 120-minute chart after peak F top yesterday. That is exactly, I just got to double check, is the 50-period exponential moving average support exactly. If that is able to be sustained into the close today, and for some reason we close closer to the top, preferably, this is now just preferably because the day is young, they're going to be selling waves coming in, people are real nervous here. If in fact we're able to go above the 99.58 high, wow, that's asking a lot. But if that's a possibility, you will then get this pattern. And I'm going to be teaching all these patterns come a week from today, right now, this time next week. It's very exciting. This is the all-day webinar right here. Let me show it to you. All-day webinar right there. Master Trader Series class with Basil Chapman. Every aspect of the Chapman Wave in this 8-hour online Master Trader Series class. And that is, you get a bonus to sign up now. You get a free month of my newsletter. It's $128 value. Wow. I mean, there are a lot of things that are to your benefit. And we were studying the CD, introducing the Chapman Wave methodology at the same time, just a whole bunch of things. Most importantly, I'll be showing you what happens in a rising wedge. What is the pattern that is most common in my experience? And the one that's most common is that you try, forget about the letter at the top. What you do is you try to make, am I going to be able to do that? Yeah, right there. A little cup formation. I always think of this as a Statue of Liberty standing there with a torch. Well, that torch, the hand, is like a cup formation, and it takes you back to just at or just above the previous high, and then you've got to be really careful. That says that the QQQ series, even though the IBB, that's the biotech sector, having made a peaky, I'll check it in a moment, short-term top, is pulling back. It's down 491. This is from 278. It's down 12 points. This is a lot of points so far. But even with that said, there is just enough evidence to say that we should have a rally into next week with a chance of making a slightly higher high above 100.34, or it's going to fail, and that'll be very interesting because I'd have to call this a recycle of the previous high of 97.51 peak E on the 24th of July. because the pullback to 93.89 did not take out the previous buy signal liftoff. So this would then have an alternate count of F/B right now, not right now, that was on the 25th of August. And the most recent high on the 3rd of September at 100.34, that goes to G/C. Now that normally what you would get is the stochastic bounces up and only makes an arch formation and immediately comes back down. It doesn't hang there in the 93, 95, 96% area for this amount of time and then give it back for that kind of G/C. So my thinking is that there's just enough residual strength to try, at least have some attempts towards going a little bit higher in some of the sectors. And that would include, at this particular time, I would have to say the XLF, which had made a peak C, and technicals are still hanging out there very well, and the SMHs, which is the semiconductor index, which is holding very, very well, having made a most recent high of 52.26 and a peak C if today doesn't take that out. And that should still go to a D. So just enough residual strength. So within that context, for my subscribers to my opening call, my daily service, we are still hanging in there long. But we are attempting to add shorts because this is the period where the risk reward to adding shorts is the most beneficial. And that's the way it is. Now, all the different techniques that I'll be discussing I'll be discussing next week, a week from today in my Master Trader series, Chapman Wave Methodology. Really, this is going to be what perfect timing, because there are some sectors that I think have made at least short-term tops. It's going to be real tough for them to go higher than this without some kind of consolidation. We're going to be looking at the dollar. Look at this. Let me run the numbers, otherwise I'm liable to run out of time. Yeah. The Dow's down 25 at 17,044. It isn't 4 o'clock, so talking about the weekly chart at this particular point, says that we really should wait until 4 o'clock. But the action so far suggests strongly that there could be a V-shaped pattern forming here, and that if the Dow takes out 16,850 to 830 support next week without making much of a new high, if at all making a new high, that's going to be a negative on the short to intermediate term. And if the Dow takes out 17,270 and actually trades in the 17,300 area, that could start an acceleration to the upside where prices get chased and chased and chased. But I just don't think that's going to happen right now. My thinking is that we are making some kind of a short-term to maybe intermediate-term type top, and we're going to go through this in detail. The S&P SPX.X is trading right now down only 3 at 1994, holding the 9-period exponential moving average, having made peak D. MACD, like the Dow, is still strong. Stochastics pulling back. It's at 86%, but the weekly chart has a little different pattern to the Dow, and this is really what I'm going to focus on over the next week. Really important, how the weekly charts are shaping up. The weekly chart is in this technique that I call the Chapman Wave Inside Track, the repellent zone. So if the S&P cracks 1986 to let's call it 1982 this coming week, that's going to be not a good sign, especially if it hasn't made much more than a new recovery high above 2011-17 within 2 points of that high or so. That'll take you to leg E, and then we've got to be really careful. I'm not talking about the monthly chart, just the daily and the weekly right now. I could actually add the peak E that was made in the 120-minute chart. Now let's go back to the QQQ series. The QQQ series has very strong support right now in the 99.00 to 98.60 area. If it can hold that without breaking it over the next 2 days, but in fact is able to get to just even touch 100, that's going to be really important. Touching 100 says, I am going back and I'm going to try to make a leg D. Let's look at the IYT. Most people are not looking at the IYT, but that is holding so beautifully. Look at this. The IYT, this is the iShares of the transportation ETF. is trading at 153.65, up 25 cents. Now, that means that it hasn't taken out yesterday's low, but it also hasn't taken out yesterday's high. Yesterday's low was 152.46. Today is 152.50. So just 4 cents, but it makes a huge difference, and it's acting really well. Crude oil's pulling back. Now, the V-shaped pattern, the Groucho Marx pattern in the weekly is really what I will focus on by midweek next week. Now, in the 120-minute chart, we have gone to an E, but it's holding really well. This is one of the strongest of the indices, so the IWM is one of the weaker. And from a peak E-top in the Chapman Wave daily, you pull back, and the pattern that I was talking about over the last few days where you got the soft W or U shape pattern, second U-shaped pattern, has much weaker technicals. So I'm watching this really closely because the IWM, the Russell 2000 ETF, is still one of the weaker. It was one of the stronger charts, and for a while now it's been one of the weaker charts of the indices. Now look at this. My Dow Quartet. And this is my Dow Quartet index. I call it an index. Of course, it's not an index. It's only 4 stocks. Of GE, acting very weak, making the H pattern. If GE at 25.90 takes out the low of 25.77 from 4 days ago, that's just going to be really bad, and also on the weekly chart, it's going to be really bad. So GE is not showing any sign of strength. IBM, same thing. It's showing a little bit of strength here, but the weekly chart and the monthly charts are saying, hey, we just stuck in a range. We're going to watch to see whether IBM is able to carry from 191.38 up 70 cents all the way to 194.14 to make leg D. This is going to be really tough to do. Triple M. That is a 3M company, international company, made a peak C and really struggling to get to a D above 145.39, up 11 cents today. But the weekly chart says this pattern of weak technicals and a failing right arm, this is what I call in the Chapman Wave. We'll be studying these charts. Let me tell you, in a week from today, we'll be looking, I'll be sending out a little booklet on chart formations with analysis of what you look for and my interpretation based on the Chapman Wave methodology. But I will also be discussing how this right shoulder failure, the potential for an H, lowercase h pattern, is so potent. And if you can recognize it and see what levels to look for, you don't even have to know much about the Chapman Wave notation. When you get to know these chart patterns, look at the daily, same thing. You remember gold made the same, the GLD, I discussed this for months, that the GLD from the peak F top back in 2011, September at 185.55, made the H pattern, the lowercase h pattern, and then plop, it came down, making another H pattern, and it's coming back down again. So these are patterns that we're going to go through. They repeat. They are in fact templates, whatever the size, because they are fractals and they repeat over and over and over again. So I'll go to questions in the den in a moment. Let me just say that the GLD is still looking very weak as the dollar has had a spectacular move, making a little bit of a top here. I shouldn't say a little bit of a top. I should say there's the potential for peak A, C, E, F. Okay, I'll do this during the break on the dollar index to tell you what my wave count is. And I'll be right back. Basil Chapman. Don't forget, check the front page of TFNN. Look for the webinar coming up a week from today. It is going to be one of the most
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so we are back and we're looking at the dollar right now. Dollar made an F/C in the 120-minute chart. MACD had a huge turnaround, but is only just now crossing positive as the dollar is trying to rally back. It's at 83.73. The index down 0.09. I think it's going to be trapped here for a little bit as the euro has, sometimes when there's a news-related event, then prices overshoot, and then there's what I call a give back the following session. And that following session gives back the excess. So maybe it's sometimes a third, sometimes just 15%, but it gives back, and that's basically what we're looking at now. They will find their level of support in a moment. The euro at 1.2959 is probably as a euro-dollar currency pair, needs to just test a little bit, and maybe if it starts to break this level right here, 12947, be careful because it'll retest the lows, it does, and retest the highs. But I would not be surprised if over the next few days, this is kind of a sideways move for the moment, just to kind of release all the tension that from that huge directional move yesterday. So that's that. Then GCZ, I'm looking at the gold right now, trading at it's up 50 cents. I've got at 1267s. Now, what's really important about this is that you've had ABC failure. Good, comes down lower low. Yeah, and I wouldn't be surprised. Almost the same sort of thing. That gold is ready for a little bit of a bounce as the dollar kind of digests its gains. But the most important thing is that the weekly chart, I haven't seen anything happen between now and 4 o'clock today. I think gold closes early, in fact. But this looks like the weekly up channel. No, inside track. support line has been pierced. That now says that the 1285 to 1292 level is going to be very strong resistance for the dollar if it does rally at any point soon. But my thinking is that the dollar is still going down. I've been saying that for a long time. I'm just basing it on this chart pattern right here on the GLD. And maybe the GLD is not the way to go, but the GLD has this H pattern that goes to a lowercase h, and I'll be teaching these techniques, folks. Everything I talk about here is based on years and years of looking at charts, studying the charts, looking at the patterns that repeat over and over, how the basic material of the Chapman wave relates to these particular patterns. And I don't know if this is a lowercase h that is going to fail and take out the GLD's low of 119.42 back on the week of the 6th of June or not. All I can tell you is that if this little doji candle for me here next week sees 121 to 120 in the GLD, then absolutely we can expect that the 119.42 level will be tested. If that's taken out, we can go all the way back to 114.46. Now, conversely, it could also say, hey, the MACD is really not turning down very sharply. It's not a wide beta. In other words, the momentum from the moving averages has not accelerated to the point where there is intense selling pressure based on the MACD, and this is what you would see when you're going up, when the fast-moving average crosses decisively above the slow-moving average. Folks, I'm going to go through all of these things in great detail week on Friday, how you can use the MACD, how you can use slow stochastic. But the stochastic is still very negative, and the on-balance volume is negative. Not very negative, but negative. So I'm going to be watching this closely because I think there's still residual strength in the dollar, but we might just have a little digestive phase, and we can watch this closely. Why? Because if the GLD takes out 124 resistance, goes to 125.50, that is going to be very good action. So I'm just watching the levels. We do not have any positions in gold right now. I had thought of a while ago getting the DZZ, but you know what? I'm satisfied with what we got. Let's see how this all plays out. And I'm satisfied that we are attempting to start short positions because there are some stocks and some indexes that are looking highly vulnerable. And the DZZ just went to leg D in the daily. So that says, aha. Gold, in fact, could have a little bit of a bounce next week as there's a high-level consolidation. In the DZZ 200% short gold, it has a high of 674. That if it's taken out, that's going to be positive, and a low of 661. It's trading right now 666 down 5 cents. Watching it closely, the stochastics are really good. MACD is very good. So, and the weekly chart says it's in leg C. There should be a D to come. So, okay, I don't think what did I forget? Well, one of the most important things, the TLT. Island reversal in the TLT. I meant to type this in at 119.43. 119.43. And that was on the 29th of August. Let me just put that in there. I like to have these things all ready to discuss. 829. And what are we looking at right now? We're looking at bonds up, the bonds itself up 30 seconds at 138.5, and you've got the TLT up 40 cents at 160.35. Now, I've made a really big deal about this. I'm going to say it again and again and again. In the stock market, we've got a break coming up. I don't want to talk into the break, so I'm going to talk about the VIX. I'm going to talk about...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So I wanted to talk about the volatility index. The VIX index, which is, I call it a measure of buying intensity and selling intensity, is at 12.87, up 23 cents. It needs to clear 1338, which was not only peak B, 1341 is peak B, but 1338 is the 200-period moving average, so it needs to clear 1341, get into 1342 or higher to start leg C. The way I'm looking at it right now is that it is starting to make a move that is very important. My guess, and it's just a guess at this particular point, is that it will not take the 11.24 low that was made 2 weeks ago, and that's going to be the clue, that we will pull back, or at least we will get close to it if there's a pullback, a market rally. But in fact, it's starting to make some kind of a base here, and that is based on also that there are new highs in all the indices, and yet the VIX index weekly chart is way above the 10.28 low that was made on the week of the 4th of July. Even though it spiked up to 1757 and pulled back, and all it did is come back to that 1124 level. So this is like a restart leg A, and the monthly chart is also starting to show a little bit of sign of strengthening. All right, that's all I can say about it. But what I will say about the price is that until the VIX index starts trading in the 15s, you will not get anything but sudden spirals to the in the VIX index. It looks like everything's coming, the world's coming to an end, and the price of the markets are going higher. But in fact, are going lower, and then they just come, and then the market comes back as a high-level consolidation. That's number one. So the VIX index in the 50s is something completely different. It's negative, and if it remains there, the longer it remains there, treating it as a base, the lower the markets are going to go. Number one. Number two is bad news. Until the market starts to see the S&P futures and then the S&P itself start to crater between minus 12 and minus 15 for 2, 3, 4 sessions in a row, and that would be the inclusion of sequential sessions or no more than one session of a rally before it goes back down again. That also implies that the market closes at its lows almost every single session. It also implies that every single rally gets smacked down and you start to make lower highs and lower lows. In other words, the news has to be incrementally negative. And then later on, after weeks and weeks and weeks, it becomes geometrically negative until you get the cameras out and everybody's looking at to see if the Dow's going to drop 300-400 points, and that's the day you get your nice big reversal after a sharp low. We haven't even gotten close to anything like that. So this is just the starting period that says when you're looking at key sectors like the IBB down very sharply, down 5 right now, 265. Having made this, I have to now put a down arrow. I have no choice. A down arrow in the daily, so the daily's gone from a sell signal. We'll see at the close today whether it goes to a sell mode, but it's certainly a sell signal. And that's very important. Why? Because it's F/C in the weekly chart and G/C in a cup formation in the monthly chart. That's going to have an impact on the market. This has been one of the best sectors. And there were one or two stocks that are still acting well, but a lot are looking very poor. Now, here's something else that's really important. When we're looking at a sector like the IYT, that is being impacted separately because USO, which is really the United States Oil Fund, is trading down 50 cents at 34.80. It made a high of 39.44. I mean, 39.44. This is crude oil that just never goes down. Yep, it's going down okay. It's down 5 points, and those 5 points might only be 6-7%, but it's a fact that the weekly chart is made an M formation. Remember, these are the patterns that we're going to be looking at. Why are we going to be looking at them? Because they just repeat over and over. The arch goes to a cup formation. The cup formation then reverts back to an arch. Where does it stop? Where are the support levels? How can you use a left side, right side price time match? That's this technique that I use here. Let's just say that it was in a so chapter 4 in my CD, Introducing Chapman Wave Methodology, has a terminology. It explains all these different things, what the buy signal is, the sell signal, etc., how the notation works. So let me just go to this chapter here. For the moment, I think we'll look at the arch formation. So we'll go to chapter 13, arch formation, and I'll show you, because arch formation is what we're going to be looking at for the next couple of weeks if we're making some kind of a top here. There's this left side to the right side. Remember, I always talk about this, that in a crash mode, that's when price can take out left side 6 weeks or even 6 months worth of data. Within 6 hours, you can do that. But most of the time, there's a very methodical way of going up and a very methodical way of going down. If you are short and it's going up, it feels like it's horrendous. If you're long and it's going down, it feels horrendous. But if you can identify a particular marker, a particular candle, particular what I call a plumb line midpoint, and that can move, but I love it when it actually works out exactly in the middle, which sometimes it does. And that's even more important because it gives you 15 bars or whatever it is to the top to peak E or F, and it gives you 15 bars down to retest that low. So those are the things that we're going to be discussing and what to look for in the different chart patterns. But the USO says, whoa, if you don't find support in the 34s, there's a real good chance that you're going to come close to testing the low of 32.68 in the January 10th week of the 10th in the USO weekly chart, that low there. So that's what I'll be teaching in my webinar to come. Now, here's another thing. When I'm looking at the at bonds. There was a question in the den. I'll get to it right away. But I just wanted to show, because it's so important to look at bonds. Bonds up 11.30 seconds right now. This is a continuous contract, which is very close to actual bond price, which is up 13. But look at this. This is the weekly chart. So far, the weekly chart is just held beautifully within this up channel, but it's beginning to test key support of 137 to 136 in the 9-period moving average. The MACD is still good, flattening out a little bit, and the stochastic is holding at 86%. So how bonds act or react if there is a market pullback? The question will be, do bonds pull back with the stocks? After all, they went up with the stocks. Or will we see money come out of bonds, the so-called safety of bonds, and go into stocks if stocks rally? Or will they go back into bonds if stocks start to tank? I don't want to give an opinion just yet other than to give levels to watch. A close below 136 to 135 in bonds in the next week or two, very negative. A push even up to at 138.5, even up to 130 into the 139s would be very positive. The monthly chart so far is still acting pretty well. It's just stuck above the trend line resistance, and we'll see how it holds into the end of September. So I just wanted, those are the things I needed to go through. Question the den about the EEM, and then we'll go to the other ones. EEM is in leg G/C in the weekly. This is the, what's the exact name? This is the iShares MSCI Emerging Market ETF, and I think it's getting a little toppy here. MACD is good, stochastic in the days at 74%. It's under 80, and that says be careful. And there's a potential for a peak D here in the daily. So, and the months is just stuck above that resistance line. We'll see if it can hold it all the way through September. But it is holding well, and if the EM at 45.54 up 8 cents takes out 45 support, that 44 area is going to be really important. On the other hand, if it breaks above 45.83, it says that that trend line resistance right there, which goes next week into the 46s, that's going to be really important. So EM right now, leg D, possibly peak D. We're going to have to watch it real closely. Now, the next question I had, let me go back to that. It was a good question there. CHL. So CHL is China Mobile, I believe it. Yeah, China Mobile Limited, trading at 64.88, up 36 cents. Made a peak C 3 days ago at 64.98. I think it's going to go to 64.99 for leg D, and then we're going to have to see what happens. So far, everything about it is positive. The weekly chart is spiraling higher in leg D, and the monthly chart is in leg B. But what's really important about this, if I put it together with the FXI, which is the 25, the iShares China Large Cap ETF, trading at 42.30, up 11 cents, that has also gone to a peak C with a gap. And now we'll be looking at leg D above 42.56. Number one. Number two is I've got this as F/B in the weekly chart. I'm just going to be conservative right now. Call it F. Preference, maybe it's a B, but we'll see. But most importantly, it has broken out of the downtrend line in the monthly chart in leg D. So that is acting very well. So China, in fact, could be telling us a story. The Dow is now only down 2, and the S&P is actually almost unchanged. I believe that in this Chapman wave methodology, looking at a particularly powerful index, which suggested that there was enough residual strength to hold the market up a little bit longer as some indices start to pull back, that's exactly what I think is happening. Look at the QQ now, QQ, 3 Qs. It's trading at down 8 cents at 99.31. If you go to the 120-minute chart, it's now got an inside bar. It's acting a lot better. Not great, but a lot better. So it's very interesting to me that, in fact, the parameters I set for my subscribers to start going to the short side in certain areas were not met yet on the day. That's fine. One of them I'm really upset because yesterday we had it at a short, would have been just a perfect short within points of this all-time high. Pull back very sharply. I still believe we'll get a nice entry on it on the bounce that probably could come early next week. Just a bounce. I don't think it'll make a new high. I think, in fact, it's already made the high. So we missed the perfect opportunity. It's still closer to the top, way closer to the top than anything else. So we're going to be watching this real closely. And but the SMHs, look, the SMH has made a peak C, and I think that there will be a D. And as long as there is some internal strength, INTCs, Intel trading at 34.97 right now, should go to leg D above 35.20. Now, leg D doesn't tell you that it's going to go to 39. It doesn't tell you that it's going to go to 32.21 and then reverse. It just says that at 35.20, that was a peak C. At 35.21, 1 cent higher, it makes leg D. That's all it says. Then you have to assess other things. So I wanted to get that out the way. Now, I know we're going to be going to a break, and I don't want to step on the brake because I've done a step on the brakes. This is not the B-R-A-K-E. It is the B-R-E-A-K. So just let me, as we're about to go to the break, let me show you something. Gilead, one of the tremendous biotechs, had making a Chapman wave Roman candle. And we're going to be analyzing this for my subscribers, this and the whole sector over the weekend. I hope to give some information. But I've got this as leg C in the weekly, leg E in the monthly. So that is really unusual, unless this high of 83.70 the week of the 23rd of May and the high of 83.46. Unless I have to, I got to study this real closely. I don't think I've missed a peak. So if this is peak C, yeah, the monthly chart at Eggy, that's the key in the daily. So this might be a time where you actually get a weekly chart at all-time highs that doesn't go to a D or higher. But we'll see about that. So so the question is, buy CHL here. Whoa, was that the question? I thought you were already in it. If you were in it, I would just say, make a stop in some portion below between 63.48 and 62.89. Somewhere in there, you can either start a position for leg D if it hasn't made it yet, or you got to be real careful about taking some of your core position and actually taking a little bit off. Okay, it's a good question. So you're in it. Should you buy more? Okay. So what happened to that break I thought we were going to go to? Should you buy more? As a quick trade, all you'd be getting is 64.87 to 64. Now, for 20 cents or 40 cents, I'm not sure I can recommend that you do that, because if something goes wrong over the weekend, you're stuck messing up your core position, which is fantastic. I'm going to say to you, as a quick trade, if you're just watching this all the time, you can grab it right there, 64.86. I'd have the tightest stop. I'd have 15 to 20 cent stop. That's number one. Number two is the moment it takes out 64.98, goes to 64.99 as CHL, I would immediately tighten that stop up real tight so that no way will you take a loss. To tell you the truth, I think you're in the core position. I don't know if it's really worth it. Do you really want to be hassling over 50 cents? I think it's going to make some kind of a top, somewhere in the 65.30 to maybe 65.90, maybe 66.20 area, at least a short-term top. So do you want to play it for a point? If it's just a quick trade, I'd say fine, then do exactly what I said. Otherwise, just step aside. Don't change your thinking. You got a core position. So, yeah, and congratulations on having that core position. I had been notating it, and then I forgot to follow up. So it's a beautiful chart, and but it's vertical. The risk is getting higher and higher. Just I'd be careful. So now we got that break that I was talking about. So thank you very much. My engineer got me on track here. I'll be right back. Basil Chapman, Dow's only down 2. S&P's down 75 cents. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. And don't forget, you got Nico and you got... This is the primal lifestyle. This is something that has to do with everything that we talk about in terms of having the right mental state, having the right tenacity to be able to do things, and health is so important. So Nico and Paige go through all these different things in the next show, next hour, and we've had fabulous programming on John Logan this morning, terrific program. Steve Rhodes with his Rhodes indicator, just a wonderful show. Then you had Tom and Daryl Martin. That was just really educational in terms of what they were looking at and how they use their techniques for the trading. Then I come along, I'm talking about my peak Ds, etc. Question the dinner about MUX, McEwen Mining Inc. It made a peak D. Remember, what is the objective in the Chapman Wave? To get you to a D. Just today, how many Ds have you seen? How important is that? Dow's up 8, S&P's now up. Been talking about that all morning. Internal residual strength was still there. Will we close higher? I don't know, but I'm just saying to you, the Qs CalMe and the SMHs, the semiconductors, and the financials say that there's internal strength enough to go slightly higher next week. So McEwen Mining makes a low of $2 back in the 27th of May. And then goes peak A, peak B, peak C, peak D in the daily. It goes to 319 and then plunges down and then makes the H pattern that goes to an M pattern and breaks the left side low bar, in this case the low bar of the 25th of July of 261. It goes down even further, breaks the 200-period moving average. These are the techniques I'm going to teach you. How do you deal with the MACD turning down and down and down and the stochastic failing? What do you do? Which do you trade up or do you trade down? No, you trade with the trend. Oh, I can't find it right now, but there's this beautiful chart. I'll show it on Monday in my CD introducing the Chapman Wave methodology, from which we'll be working very closely a week from today, Friday. This is what you want to look at. So the question is, what's happening? This series of dojis right here, the dojis of the 6th of June and the 9th of June, tiny candles with the open and close almost at the same level, that is probably going to be really important. That makes it's trading at 240 right now. That makes 232 to 217 absolutely imperative to hold. If it doesn't hold that, it's going to test the 2 area. So this is not good at all. The stochastic is trying to flatten out, so any rally early next week is going to be very important. Using the Chapman Wave phantom peak, I'm going to be teaching that. That's the phantom peak from the 3rd of January in the weekly chart to MUX's next bar of 217 high on the 10th, the week of the 10th of January. That is a phantom peak. Takes you to where? Just above the 200-period moving average, to a peak D, that 3.74, and now it's coming down. And it's coming down, and it's coming down, and it looks, everything about it says the candle of the 13th of June with a low of 223 and a high of 277, that's the candle of importance. So the answer is, I think we're going to be going lower. Now, let me just do this because I want to show you one more time before we wrap up for the day and the weekend. I will be sending out to my subscribers, as I have for quite a while now. Over the weekend, I'll send the charts as I'm done. These are Monday's charts, but I'll get them done early, and I'll send them out as they're done, plus a couple of study charts, I believe. Now, look what we've got here. We've got my Master Trader Series. Learn every aspect of the Chapman Wave. Well, it won't be every, but it'll be really the most important, succinct points that I can make in this 8-hour live online Master Trader Series based on the Chapman Wave methodology. Check it out. You get my opening call for a month for free, $128 value. You'll be using my CD introducing the Chapman Wave methodology. Just a bunch of things that are really important. Let me go through this once again. The VIX is very important, but it's not nearly as important, VIX.X, I don't want to run out of time here, as the fact that until the VIX hits the 1450 area and then starts trading in the 15s, you will not get a sustained move to the downside. Sectors can start to pull back, but in the meantime, back at the range, that's key. If by the end of the day the VIX is down to the 1440 area and the 1440 area, and the Dow is anywhere in the 17,100s, that's really good action, at least for a bounce next week.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.